Hey, good everybody. It's Sil here for the Daily Market Pulse. This is Thursday, August 28th. We're fast approaching the long weekend. Markets have bounced somewhat after hours, but they were selling off for the most part today, so stocks are down, moderately down, but the volume was very low, so no distribution days on the count thus far. Everything looks pretty cool. There's a little bit of a drop on the NASDAQ right there, a little bit of a bounce late in the day, plus it's actually bouncing again. So there's still room to that same 17,000 level. We talked about that before. The 8 moving average coincides. The 50 is starting to rise. The 20 is coming back behind as well. So we can see sideways to slightly lower going into tomorrow as well with a long weekend. And then next week is hard to say what they'll do, but generally some selling into a long weekend is not unusual, especially at a resistance level like we have here. If I drew a line across, let's see, right about here, there's your resistance right there. So that's not unusual to have this sort of effect. Candle formations are certainly dictating the same thing. You can see there's a large upper shadow. We talked about that sideways yesterday with a spinning top, and then it's down today. So that's not unusual. That's about right. And the percentage of drop is about right as well. So that's that for the time being. The S&P will have shown a red candle as well. You can see that the Dow still has room to the upside. So does the S&P here. Shooting star sideways, and then very similar to what we just saw on the Dow, back to the polarity area near 1985. That's all very normal. Moving averages below 20 and 50 are below it, coming up. Resetting on the stochastics as well. NASDAQ came down as well. So all these came down about 1/3% approximately. The NASDAQ gapped lower on the open and then bumped up a little bit, but it came right to the window as support. The 8 moving average is directly below. This could still drop to the next window near 4510 to 4500. Yep, in that vicinity there for sure. That's still possible. And that's about it. Room still to the upside to some degree, 4600 or higher. TSX, let me back away. There it is. There's the scoop formation. There was the high. It held the support, the 8 moving average. It still looks like it's going to grind higher, even if it drops a little bit. Still looking for a grind higher into this bullish run. Moving averages are stacked correctly. 8 over 20, 20 over 50, and all rising. Stochastics resetting itself. The DAX has had a decent bounce all the way into the 58 moving average, and then we said this is likely a good spot for resistance. Sure enough, a little bit of a pause yesterday. Hadamid confirmed today with an evening star formation. Back to the 8 moving average, but anywhere 9,400 to 9,300 is the support area. 94 may be enough of a drop. Right now we're looking for a break above 9,600 once again to hit 9,800 as the next target higher. Then we move over to the US dollar, Canadian dollar, and that is today. So it came down into support area, held 2 lower shadows there in the last couple of days. This may be enough to hold it. Let's see what happens. Although it's broken the box formation, this may look lower. 8's about to drop below the 20. We may see the 50-day moving average or into like 107.75 possibly on the downside. That's US Canadian. Now we go to Euro US. This is trying to stabilize at 132, with 132 being the window above. That's resistance. You have a 4-day island currently. Anything below 131, so we'll call it 65. You're looking shorter into 131. Otherwise, through the window above at 132 and a quarter, you'll be looking at 133 to 133 and a quarter. Treasuries went higher today. So they were into 141 yesterday and now higher, looking for 142 next, possibly 143. Support now is going to be 141. So watch for that and those levels. So now we got the yen. The yen bounced off 96. We're looking for the 8 moving average first, and then the possibility of 97.5. Those are all still possibilities. Not overbought yet, so take a look to see how high this can go. It may retrace and retest 96 or the halfway point. And let's see what it does. So gold still continues in a bigger downtrend, and but bouncing off 1275 and 1280, looking now for 1300, and then from 1300 to 1325. Silver looks very similar to gold in that last candle. It's got a bump. It's got a little bit of an upper shadow as well. It's still loading. There it is. There's the upper shadow. In fact, the upper shadow is much larger. It was not quite that big earlier, but it's come off the 20 and settled near the 8, but it's still a higher high and a higher close. So still looking for $20 and eventually $20.50 on the upside with support across 19 to 1950. Crude now, full effect of the October contract. It had a decent little bump up today. You had a doji yesterday, which there's the bump up through the 8 moving average now. So now it's through the 8. You're looking for the 20 and then probably into 97, 98 as your targets above. Support across 93. Small caps, as we saw everywhere else, retrace. It fell back with the falling window back to the 8. The 8 had already crossed over the 50. But the 50 and the 200 are flat. The 20 is just now rising, but beneath all other moving averages. So look for support across 116 to 115, possibly as low as 114, but I'd be thinking 115 is more likely. And then lastly, with the markets dropping like this, we typically see the VIX at least pop a little bit. It did. It gapped higher. It went higher, made a new high to the 50-day moving average. Just under 13, more like 1250 to 1260, and then faded back to 12, but right at the window and the 8 moving average. So I'm expecting the window to hold. We got room all the way to 1350 potentially, 1250 to 1350. The downside is the current window, but then 1150, and below 1150, 1050 on any kind of a strong bullish run in the markets.